I'm making them bob. Could never be greedy, I share with the flock. They all got my back, so I'm never gonna fall, yeah. I fell in love with a bitch, she fell in love with the streets. Put all my tears in the beat, Smizzy gon' make it so sweet. With a Draco, I'm sweeping the streets. Why would they think that I never got it? You go down and you know that my nigga sliding. If it's big, then you know that my shawty sliding to the end of the grave. You know she riding for the cream and the cheddar. You know I'm killing on my granny. We stack it up to the ceiling, 20K on the drip, man, that's how I'm feeling. And my cousin, the killer, the nigga.
So this one, I'm not gonna delete everything and start it from the top. I'm just gonna explain, because this is one of the trades that I'm not looking forward to, because I've already executed this trade way earlier. As you can see, I had my long position indicator here. So it's simple. I did my lowest lows, highest heights, my significant zone, and I drew my structure. As you can see, this was a descending structure or correction, and we had our 1, 2, 3 touch. We had an impulse to the upside, and right now we're having our correction. Let me just remove this. And this is the daily, as you can see right here. So with the correction, this was a huge correction actually, and I traded within our correction. So with our correction, you can see we had this first low, second low, third low, and with the third touch or third low, it has the highest probability. So if we scale it down to the 4-hour time frame, you can see quite well that I had my structure at the third touch. This is the third touch right here, right? And we had this support zone. As you can see, the price didn't pass through the zone. It just rejected 1, 2, 3. So within our 1, 2, 3 structure, we have a 1, 2, 3 pattern, right? And as you can see, I drew so many things within the pattern, but it's really not necessary. Let me just fix my support. As you can see, a lot of things are not necessary, just like this structure here, because this was a simple double bottom. You could have entered here because of this double bottom here, and this support level or trend line, because we had a rejection here, here, and the last one with our confluence of this descending structure that broke out to the upside. So when the market broke out, it went back down, and it's fine when it does this, considering that you took your trade at this low, right? So this would have been a double bottom, and it would have given you an opportunity to place more entries if you didn't go crazy with your margins here, right? So you could have bought here, and I drew my resistance zone here because we had rejections. It's like 1, 2, 3 rejections. So I favored the market to move accordingly so that it can break this resistance zone, right, and retest on it. So that's why I did my long position indicator from this zone. So from this zone, it was a buy, just like that, right? Just like that. I placed entries here, I bought, and I got out at this resistance. And when I zoom out, that's how it looks. So it hit TP, but and then it went down. It rejected from my TP, right? But just for a short while, because you can see right now the market broke through my structure. So the market, when it breaks through structures, two things can happen. It's either it goes just hold on, I'm looking for, because I'm tired of drawing, dog. There is this there's this tool Manando uses. I've seen him use it. Let me just try to look for it, but if I can't find it, it's okay. Okay, it looks like I can't find it. Just hold on. Okay, so it's either the market goes like this, forming 1 2 3 structure, or where on earth did I find that shit? Okay, I lost it again. Oh, here it is. Or the price can just do this, right? These are the directions the market can take. So this one is less likely to happen because everything is just pointing to the upside. So we're gonna take this direction and wait for this structure to form so we can place our trade right here. And for confluence, right, you can just draw a resistance for this high, because it broke through this resistance, right, and it has to retest or backtest this new support or previous resistance. So this is our USD JPY, and this is gonna take a while because this is the 4-hour time frame. So this is one of my least favorite pairs right now. Moving on to GBP JPY, something similar is happening with this one. Let me just erase it. Starting from the daily, I'm gonna start AV pair from the daily. So as you can see, if you start with your highest heights and lowest lows, you can see we have this height, this low, and this low, right? And now we're working within this area. So you can see we had a structure, a descending structure. A descending structure means the breakout is going to be a buy. So we had our structure here. It broke out, huge impulse, huge impulse. So as you can see, it's close to our resistance, right? It's very close. Let me just go to the 1 month just to see what's really happening with this pair. Okay, this pair is at the very bottom, right? The price is at the very bottom. So I'm just gonna favor the price should get to this point. That's my prediction, but I may be wrong. It might not reach this level. It might actually form a new low. I don't know. So that's just for direction's sake, but we can confirm our directions in our very small time frames. So let's just have see what happens in the current market, right? Let me just expand. So you can see the price is in a correction right now. First thing you should do, spot your highest high, your lowest lows. Okay, we've already have our highest high, so we're just gonna adjust it, and you can see we haven't reached this highest high, and we're gonna reach it because that's our 90% rule. We had a descending structure. Okay, let me just do this. We had our descending structure here. We had our descending structure, and the market broke out to the upside. And as you can see, this breakout, it doesn't have a flag, right? It doesn't have a correction. This impulse doesn't have a correction. It needs a correction. So we're gonna use the bar pattern, take a correction from the previous market. I selected the wrong thing. My bars pattern. So we're looking for a correction around these areas, right? It might reach because this was a significant area or zone, so the correction should be around these areas. We're looking for continuation right here, just like that. long position indicator. And this is a very short trade because we're already very close to our 90% rule, but the reason being is because we didn't receive or get any flags or patterns yet. It was just a straight out impulse, small correction with no confluence, continuation. It moved. It created a huge impulse here because this is the 4 hour time frame. So we're looking forward to a flag. This is going to be one of my favorite trades because it looks simple. It's moving accordingly. The only thing missing is this flag right here, and we're gonna buy aggressively if this forms. So that is GBP JPY. Let's move on to GBP CHF, Swiss franc. Okay, this is very choppy, and I don't really like trading the British pound because it has a tendency of moving sideways for the longest time. So I'm just gonna give you an overview of this one. Let me scale it to the 4 hour time, the daily. So with the daily, you can see we had something like this, right? We had a descending structure, just as so. No need to draw your highest heights and lowest lows just yet because this structure is so huge and it's the daily. So we're just gonna leave that one and scale it to our correction here. Hold on. We're gonna scale it to our correction right here. So our correction, it's a huge one. You can see it moves sideways for a very long time. Let me just see, we've been in this correction since the 11th of March till October. That is literally half a year. That's a long time. So we're gonna have our significant resistance here because you can see we had tons of rejections at the zone, which means the zone is very important. We're gonna go for our lowest low, which is this zone here, and we should be fine. So I drew my structure. This is my structure, right? With the structure, you can't really tell which is your first touch, which is your third touch. Right now, we're gonna focus on the current market, and as you can see, we're having another structure here. So this structure, I actually took this trade, but I'm out. I didn't hold for long. I only have for like, I think, a day or two. So we had our structure here descending, which means it's a bullish structure. I counted this as my first touch, second touch, third touch, based off my trade of the breakout for this resistance. Let me just scale it down to the 1 hour, and so you can see there were tons of confirmations here. As you can see, we had this small inverse head and shoulders right here. That was our first confirmation. We had this let me just find that drawing, that path. So we had an impulse, then right here we're having our correction. We had our correction just right there, right? And as you can see, the correction is moving within this significant support and this one right here. So we have quite a few zones for this correction right here. So I was gonna base my trade off either the zone or this one below, right? It was just depending on where the market is gonna reach. So fortunately, we had our resistance here, we had our breakout here, and as you can see, we had quite of a structure, descending structure right here. At first, I entered my trade right here, right? I took my trade right here because of two reasons. This structure with the dotted lines, it's a descending structure where the breakout I bought, and the breakout for our main resistance, right? So it broke out here, retested here. So this is why I bought. The market bought a while, rejected here, and I know most people who don't really understand patterns and structures, they who look at like things like double bottoms and head and shoulders, who solely trade double bottoms and head and shoulders, they would have taken this head and shoulders, fake head and shoulders right here. As you can see, we had an actual head and shoulders right here, but this was to trick traders into blowing accounts because so much confluence was confirming that this is going up. So I ignored this head and shoulders right here, and I just bought. So I bought here, and then when the market was reaching this right shoulder for the fake head and shoulders, I went out of my trade to see what will really happen. So I got out with small profits, and then the market sold, right? It sold, but then it didn't sell because of the head and shoulders. It sold because it wanted to make a double bottom right here. So with this given double bottom, I entered again. I placed my trade at a very good spot. Let me just fix it. So we can see I entered right here, right? And the market has been buying ever since. So the market has been buying ever since. I got out of my trade in the AMs today, because today's Monday. So the moment the market opened, I waited to buy a bit, and at this resistance here, I got out my trade and it went down. But then I could have held, because my 90% rule is way over here. So I could have held this trade. It was just a matter of not liking the pair itself, because British pound loves moving sideways for the longest time. So it was just a quick in and out trade. But those who are interested, you guys can spot out bullish flags to go to the upside, because we're only just a few pips up. We are way far from our 90% rule or TP. So that is GBP CHF. Moving on to NSD JPY. I'm just going to erase everything. A lot of pairs are buying this week. A lot of them are buying. I won't lie, because all the pairs I've been looking at, most of them are buys. So we're gonna take this one from the daily. It's similar to some of my other pairs that I analyzed. So it's also choppy. It's quite choppy, but you can see it follows the same principles as descending structure. You can see we had our impulse, correction, impulse, correction, impulse, and right now we're having another correction right here. So let's go to the 4-hour time frame and see our current correction. So with our correction, we can just fix our points. 1 2 1 2. So this is a double bottom, but the reason we had a double bottom instead of 3 touches was because of the structure here. This is our 1 2 3 structure. So as you can see, we had 1 2 in the third touch, and the third touch we had great probability to go to the upside, because it was first the double bottom and the 1 2 3 structure. So we had 2 confirmations for our buy right here. So let me just zoom in, let me expand. As you can see, we had a very great impulse. This is quite significant. We had an impulse. Remember, this is the 4-hour time frame, so this impulse is very valid. So we had our impulse, and right now we're in the correction phase, and you should draw your correction structure or pattern. So that's our highest height or the resistance for our structure or correction, and this the support. So as you can see with this one, just hold on, I think I'm analyzing this for the second time. Oh yeah, I did. Okay, let me just delete it. Deleted. Okay, we'll look at Euro JPY from the top, which is the daily, and as you can see, we have something very interesting. Okay, let me just go to the monthly, so because this is a very huge structure, and in the monthly it's not that obvious, but then for you to make it obvious, you should probably draw your lows and highs. So as you can see, this structure right here is coming from the lowest low, because this is the origin of the impulse. We had our impulse, and now we're having our rejection, or I mean correction, sorry. So with our correction, we're gonna have to draw the support and the resistance for this. So with this one, you can actually even draw across prices, because this might have been a fake breakout just to trap traders or whatever. So this is our structure here, and we're gonna go to the daily time frame, and as you can see, our support or our highest highs and lowest lows, they make it easy for us to spot where the market is coming from and how it's looking at the current market. Because right now, thanks to our lowest low, we know that we are in a correction, because the market moved from the lowest low with an impulse to the upside and from the correction, so the direction is upwards. So with our correction, this one is quite different from what we've been looking at, and you won't immediately spot the difference because the structure seems the same, but the difference here is it's not complete, as this was supposed to be our first touch to the support, second touch to our support, and we need the third touch for us to go to the upside and form a correction or whatever. So the market has to move accordingly. So right now we're just rushing the market by entering what it's giving us before it gives us the bullish movement, right? So right now it's in the bearish movement, sorry. So it's on the bearish side, because it has to complete the structure with our 1, 2, 3 touches. But this is not always the case. The reason why I am quite confident that this is going to go to the downside and not the upside, because it already rejected from my resistance. It rejected quite significantly, and I'm going to show you the impulse. You see, if you stretch it out, you have quite an impulse from here, and then your correction starts here, right? You can see that this is an impulse. This is an impulse, and our correction is right here. So right now we should be looking at trades to the downside. So let me just draw my correction, just so. And at the bottom, if you can't really draw trend lines, you should just draw zones. Use zones if you can't use trend lines. So my correction is looking like that. I'm gonna go to the 4-hour time frame to see what's really happening, and as you can see, I don't really have much right now. So the best thing that could happen that will support my predictions is that if the price moves, just hold on, let me use a bars pattern for me to illustrate properly without ugly drawings. So I'm just gonna take the previous market and do that. So if the price can just reject around these levels, and form a correction after an impulse just like so, I should be looking forward to enter my trade right here. Right here. So this is my short trade before the Euro JPY starts buying. So right now it's still in a bearish movement. So, this is the only time I'll place my sell entry, because the market can literally just push up and disregard everything and just keeps going up. So if it does reject around these levels and it forms a correction like this, I'm definitely going short. So that is Euro JPY. I'm gonna leave that one and move on to AUD JPY. So okay, I think I sent this one in the group when it was still around these levels here. Because for me, I was expecting the third touch. Let me just zoom in. Because we had our first touch, second touch, and I was expecting my third touch. But then the market just went up without giving us that third touch. So in cases like this, you really need to be watching the market, and because for the market to reach here, you probably calculate the amount of hours or minutes it will take to get there. So you tell yourself, oh no, I'll just check the market after. Let me use the ruler for me to make my point valid. So as you can see, my ruler says 8 bars, which is 1 day and 8 hours. So you could have said, I'm gonna wait a day and 8 hours for it to reach to my third touch. Without checking the market just literally went up without the, let me just put this aside, without the third touch confirmation. So it just was a double bottom. It had the first bottom and second bottom. So if you scale it down to, let's say, 1 hour, you can see we might find a structure to the second bottom. So you can see we had a 1 2 3 structure, 1 2 3 structure, highest probability at the third touch of 1 2 3 structure, and you could have bought right here by just looking at the market. Because sometimes predictions, they don't really go as planned, but they might go your direction. So without the third touch, we had enough confluence for us to buy right here. So that was Euro JPY, and I'm gonna look at NSD CAD. Let me just scale it up and see if it looks interesting. Okay, I've been going through NSD CAD for a while now, since January. Yeah, because this happened in January, March, and this structure right here, it took from May to October to form. So right now, I'm not gonna start this from the very top because the video is gonna be so long. With that said, we already have our structures, our zones or levels and whatnot. So I can just add one more zone. Let me just use the horizontal array. As you can see, we had quite a number of touches at the zone. Quite a lot, 1 2 3 4 5 or whatever, and the current market is at our zone. So with this one, this is a correction because this was a structure. And okay, let me just add another zone, our low slow, or our 90% rule. So you can see we had 1 2 3. This counts as one touch. As you can see, we had confluence within that one touch. There was a structure of 1 2 3 touch. So this was enough confluence. We could have sold here. And with our current structure, the same thing is happening. We have 1 2 3 and to the downside. So from the third, this was a double top, more confluence. So it was 1 2 3, your first confluence or confirmation, and this double top, this zone here was your second confirmation for a sell. So with our current structure, you can see the impulse has no correction unless if you're counting this small one here, which you could have based your trades off. Let me go to the 4-hour time frame so you can see it. You can see that we had this little correction here, but this was not a very clear correction. So with the market, we can have another correction right here where we are, and this is what I'm praying on for a retest for this broken support, so the market can go back up to confirm this breakout. So this is what I'm looking at with NSD CAD, right? 1 2 3 touch and so on. And I'm just gonna sell at my third touch with the highest probability. So this is how NSD CAD looks like, and it's a very long trade because our 90% rule is quite fast. So a lot of opportunities to sell will happen here. We'll have a flag here. We might have a flag here. Let me just draw. Might have another flag right here. Right, we might get another one, and so might get another one, and so on. So this is my NSD CAD, and this will be my last pair that I'll be analyzing. This was quite a long video, so if you watched till the end, thank you very much. Make sure you like, subscribe, and you can push the notification button on, so every time we post screenshots or new videos, you'll be one of the first people to get notified. So thank you for watching. Till the next video. This was the Monday market breakdown for our new week, and I hope everyone has a successful week. Thank you very much.